NVIDIA reporting earnings that did beat expectations, driven by surging demand for its AI chips. But as we mentioned earlier, also issuing an upbeat forecast for the current quarter, despite signs of slowing growth. And that's what's got people looking at this stock maybe a little differently. We'll see. Vivek Arya is the Bank of America Securities Senior Semiconductors Analyst. What say you, sir? What do you think? What did you think of last night's numbers?
Yeah, good morning. I think that, before we look at last night's numbers, let's look at what they actually reported and the track record that they have set. So this is not a small company. This is one of the largest, in fact, the largest company. And it just put up a quarter where sales grew 94% and earnings grew over 100%. And they're guiding to a quarter where sales, yes, they're slowing down, but slowing down to a rate of over 70%. And when I look at what they are able to accomplish next year, we think they can grow over 50%. And I was just looking at the other, so-called Max 7. NVIDIA will probably grow 4 or 5 times that growth rate next year, and it's trading at less than 1 times earnings growth, whereas the average of those companies is trading at over 2 times earnings growth. So we think the numbers are exceptionally strong, but you're right that they were not able to come close to the so-called whisper expectations. I think part of it is they are just at the start of ramping their new Blackwell product. Supply is just starting to get going. But if I look at the usual range of beats they have versus their guidance, I think that'll probably get us pretty close to where people were expecting the numbers to come in. So I'm not worried. I think this is just quarterly noise, and this is to be expected in the growing pains of whenever they're launching a new product.
So,
the key is
what do you think the disappointment is here then?
Sorry, can you say that again?
I said, what do you think the disappointment is here? I mean, there was some...
the disappointment is that, the supply chain, is scrutinized very closely. It's followed by a lot of people. And every time the company reports, expectations continue to build up naturally for this size and what the stock has done. But there are always constraints when it comes to not just getting the supply, but actually building the products, getting them to customers. And what we have seen from NVIDIA over the last 2 years is that they are able to beat their own guidance by $2 to $2.5 billion consistently. Last time they guided $32.5 billion and they reported $35 billion. So that's why I'm not surprised to see them not exactly come to the high end of where the whisper expectations are. But if I look at the usual range of beats they have, we will come pretty close, I think, once they actually report the quarter. So I think this is more a case of, expectations in a transitions quarter. It's nothing to do with the long-term fundamentals of the company.
And your sense about this Blackwell chip is it's just going to knock it out of the park, or you think it's going to? Is there anybody even in the vicinity competitively at this point?
No, I think they lead the pack for the reason that delivering this product is more than a chip, right? You have to, first of all, be able to put 72 of them in a single rack. You have to connect it with very high-speed optical and copper interconnects. Then you have to have a system and software level approach. Then you need millions of developers who know how to do something with it. And then you need to have a whole range of relationships and not only the supply chain, but with relationships with the enterprises, with the cloud companies. And I think that is unparalleled. The other thing to keep in mind is they are in an industry, large language models, where the technology is changing several times a year, right? And their ability to deliver a new product cycle, they have accelerated from 2 years to 1 year. Even that is not sufficient. So we think there's another few years of build out that is left to support this rapidly growing industry.
Vivek, this is maybe a longer term challenge, if you believe it is a challenge, but there is a debate taking place inside the large language model world right now about whether the models themselves, the scaling of the models is happening at the same pace it used to, meaning this sort of hockey stick angle is slowing down. Obviously, you saw Sam Altman take to Twitter, I think, last week and say there is no wall, meaning there is no slowdown. But what is your take on what's happening here?
Sure. I think, when we look at the technology industry, right, we used to have Moore's Law, and I've been following this industry for a while, and every year people have been pronouncing the death of Moore's Law. And here we are almost, 50 years later, and one version or another just keeps on going. When we look at the field of large language models, it started last year, right? So we are just kind of in the first 1 or 2 years, but I think it's it's expected that the industry is going to take a step back. In fact, we saw Microsoft CEO just address this issue 2 days ago. He said that he's not seeing any kind of slowdown in scaling. And it's not just one company driving it. This is a global industry. So you have many different companies driving it in the direction of training, in the direction of inference. So we do think that, it's expected for the industry to, pause and reflect from time to time. And instead of changing the nature of these models 3 or 4 times a year, maybe they change it 1 or 2 times a year, right? But the point is that the amount of computing infrastructure that is required just to address what is already there is going to take a few years to go and deploy. So we're not worried.
What do you think the fair, for those folks out there who either own the stock, want to own the stock, or thinking about what to do with the stock, what do you think the fair value of the stock is?
Yeah, technology stocks tend to trade between 1 to 2 times their earnings growth rate. We have their earnings growing over 50% next year, and the stock is trading over 30 times next year. So we still think that it's a very compelling valuation, even though it has run a lot. So it really depends on earnings growth. And as I mentioned, when I look at the other so-called Mag 7 in the industry, they are trading at over 2 times earnings growth. So using that specific valuation metric, we still think NVIDIA is very compellingly valued.
NVIDIA reported third quarter results that beat expectations for sales and earnings, and the AI chipmaker delivered a better than expected forecast. Earlier, the stock had been down a little bit, down by about 2.5%. Right now, it's only down by about 0.8%. Joining us right now to talk about it is Ray Wang, Constellation Research founder, chairman, and principal analyst. Hi, Ray. How are you?
Hey, good morning.
So did the decline in the stock price make sense to you? Is this just a case where NVIDIA can beat expectations, but it's almost impossible to beat the highest whisper numbers on the street ever? There are just such high expectations built into the stock every time. This is not a big sell-off. It's down by less than 1%.
Becky, you're absolutely right. I think people were taking money off the table. It was more than a mic drop moment. It was a spike the ball in the end zone performance. But the problem was everyone's saying, hey, what's going on, right? Should we take some money off the table and come back? And I think that's really what happened. I mean, these were some big numbers, right? 19.83 net income, 37.5 billion in guidance. That's huge.
Yeah, it's hard to find many flaws or faults at all with the numbers that came through. It does remind me of last quarter when they beat expectations again. The stock was down immediately after the earnings, but then it went on to grow something like 17% over the course of the last 3 months since then. You've still got a buy on this. You're looking at, I think, a $180 price target. The stock's at $144 today.
I am, and here's why. When we look at the Mag 7, they're basically growing exponentially versus the rest of the Fortune 500. So 7 stocks are basically growing really quickly, and NVIDIA is basically selling to 6 of the 7 of the Mag 7, and it's a huge number. It's about 50 billion a quarter in which these Mag 7 are spending in terms of data center growth. And so that's really what's driving the majority of NVIDIA's revenue in the data center side. So that growth from 3.8 billion to 30.8 billion in 2 years is huge, right? Gaming doesn't even come close. Gaming was up at 3 billion. And so what we're seeing right now is still a massive build out on data centers. That's going to happen for the next 12 to 18 months. And that's what's driving it. And then after that, we're going to see something different, which is in the sovereign AI. Countries are going to say, hey, our companies can't catch up, and we've got to invest at a country level.
Yeah, I've heard people knock NVIDIA because it's really just these big companies like the Metas and the Amazons that are buying all the chips right now. But that's because they're first in line. Nobody else can get through to them. When you hear about the demand that NVIDIA will discuss, Jensen Huang will discuss on the conference call, it's hard to look at the supply versus demand as a problem. It just means far more people want these chips than they can possibly produce at this point. If you were looking for a hole to poke, because most of the holes that I've heard people try and poke in this argument don't make sense to me, what's the best argument you can think of for why you might be concerned about the stock?
The only reason I'd be concerned about the stock is living in the valley. What we're seeing is a ton of people at NVIDIA retire. They've put in their 5 years, they put in their 10 years, they're leaving, they're cashing out, they're doing something with their lives. And it's really the talent that's going to be hard to beat given that stock run up. The other piece is really Blackwell to Rubin when it happens in 2026. The question is, same questions people are going to ask, are the chips going to be hot? Are they going to work? I think that's where people are worried about. But right now, these chips are 2.5 times faster. And of course, they cost 2x as much. And people are willing to make that bet.
There were those concerns in the last week or so about the chips overheating, the Blackwell chips overheating when put in some of these server arrays. I've read other reports that people are speculating it's already been corrected. What do you think?
From our conversations with people over there, it has been corrected. And I think the other piece that's happening is this is really complicated. Not a lot of companies have ever done this before. And I think they've tried all different possibilities and combinations. And I think they've figured out a couple solutions. And that's what we heard. And this shift is actually important because if you think about what is next, right, it's going to get even smaller and it's going to get even hotter. And as you know, the consumption and the power consumption on these chips hopefully come down, but people keep stacking more chips in one place, which is why they get really hot in data centers.
Ray, I had not heard the argument before about people retiring at NVIDIA. Obviously, if you've been there 5 or 10 years and you've got stock options or restricted shares, you're sitting pretty. You've made a whole lot of money, and it is pretty easy to walk out the door. Where does NVIDIA get new talent?
Oh, they're not having trouble finding new talent. I have a son that's a comp sci econ major, and as he tells me, every comp sci major today actually is looking for a job because AI is pretty much obliterated. So NVIDIA is getting a lot of great talent from different companies, from young startups who are actually folding into experts in the enterprise that have been around for a while. So they don't have a hard time finding talent, but the existing talent pool is actually some of them are starting to take a break.
Even if there are problems with the Blackwell chips, if there were issues around it, my first thought was, where do they go? Right now, there's nowhere. But who is in pole position, even if they're far behind? Who's in the second place? Who might be able to come in and have a different offering at some point down the road?
We all hope that AMD has something to offer, but the challenge is the gap is so huge, right? They put so much money into the development of this set of chips and the capital required to get to the next set of chips. And if you continue to go down that path, very few companies are going to be able to pull that off. And I think that's really the challenge. But when people say, hey, what do you do after NVIDIA? The question is, and we'll take a quote from the Wayne Gretzky playbook, let's skate to where the puck will be next. And the question really is, what are we going to do when we go from semis to hardware to hyperscalers to software? Where does that move to the next piece? And once again, NVIDIA has an answer. They're in the space. Their CUDA layer actually allows them to build the software on top of the chips and create that access point for the next set of ecosystem. And so the layering that's going on at NVIDIA is what really makes it a very tough company to beat, because they've been thinking through all the possibilities, and Jensen has even more to offer going forward.
Let's get right to NVIDIA, moving higher after beating on both the top and the bottom line, also nearly doubling sales year on year. Yesterday on the earnings call, Jensen Huang did reiterate the strong demand for AI.
The age of AI is in full steam. Generative AI is not just a new software capability, but a new industry with AI factories manufacturing digital intelligence, a new industrial revolution that can create a multi-trillion-dollar AI industry. Demand for Hopper and anticipation for Blackwell, which is now in full production, are incredible.
Jim, everyone wants to talk Blackwell, but even some of the Hopper guidance was surprisingly good.
Yeah, look, I mean, this is one of those situations where whatever you can get from them, you'll take. That can be very stark because you may not be able to get the first-ranked stuff. I think that there are multiple customers. Look, I'm going to step back for this in a second. I've never seen anything like this. There are multiple customers who would buy everything they have. When I say everything they have, I don't mean like, hey, you know what, I really want some. I mean like, I will take everything you have. And the customers that we're talking about are customers that we all know. And they are not doing it in order to be able to say, because the other guy may have it. There's going to be a winner-take-all, loser-take-none aspect. But the main thing is that everybody has something that they feel they can make 5 to 1 on. I'll pay you $40,000. I'll make $200,000. And David, when I say I've never seen anything like it, what I mean is that this is a different order of company that we've ever seen in our years together, because it's really reinventing. No, it's not. It's creating a whole new industry. And in order to understand it, you have to do things that you've never done before. Like, for instance, I put in, Jensen says something that's rather, I don't mean to go on too long, but Jensen's talking about something that he likes, a Google product that he just, he's just constantly on. I mean, a good example.
Same thing that Benioff said the other day.
Again, I talked to Mark about it. Absolutely. And what you do is like you input, tell me what's so great about this conference call. And, here it is. I mean, I've got it.
Tell me.
This is it.
Okay.
Well, all we asked, this is Jeff Marks. We put in, give us the highlights. This is the product that Jensen said he loves to talk to.
Oh, you used the Google product to actually go over the conference call.
Well, he was using the living daylights out of it.
Because thank you, Carl. Because I used the living daylights out of it, so I did it. And I got 5 pages of just the quick distillation. If someone said, pick your best 5 pages. I don't mean to wax too authoritatively on this. I will say this. That when the stock was at 140, 141 this morning at 3:30, I was going to town, whatever they call it now.
We noticed.
Just saying, listen, what are you, clowns? It's just short-selling clowns with 100, 200 shares. Because this thing is not anything I've ever seen.
And, of course, what you were using from Google is generating what it does on their...
Yeah, I did. It's like kind of a hall of mirrors. But, when I spoke to the company after for about a half hour and what they're talking about, first of all, the story that came out this weekend about burning too hot, they used some words that I was surprised. They said, it's a lie. Now, that's hard. That's where you go to jail. When you lie about financials, journalists, whatever, it's a lie. I would not want to commit a lie against this company. There was no heat issue.
You don't believe that?
No.
Because they deny it. So you believe them and you don't, I
believe... Even you said there are probably people within the company talking to the information.
Yeah, well, that's what they do. But if you go to a reseller, a wrapper, a packager, of which there are 3, right? Supermicro and Dell and HPE, they did not report any overheating. So it's entirely possible that you bought something, you got something, and you souped it up and you overheated it.
I see.
But, David, it's a serious charge to say that story was a lie and they couldn't do anything about it because they were in quiet. I do not want to be affiliated with a lie, and anyone else who's affiliated with it, I think, is suspect.
Yeah, no, you never feel good as a journalist when a company calls you out in that way.
No,
that's
you
for
don't.
Sure, and it's something you want to avoid.
Yeah.
All right, let's get back to the actual quarter itself and what it means for the future. $37.5 billion in revenues in terms of guidance for fiscal fourth quarter of 25.
Right.
Let's just talk a little math here. Obviously, yes, we've never seen anything like it. What do they do? $94 billion in revenue. They're on a run rate of over $100 billion.
A lot of revenue.
A 94%, increase. First time in 5 quarters, so they didn't have more than a triple-digit increase in
I know, it was very
revenue
disappointing.
growth.
There were clowns who were actually like clowns. I don't mean that. I mean chowderheads.
But your point is simply the demand for Blackwell is undiminished. It will take this product throughout its ramp. There will be endless demand for it.
Yes, and then every year, they're going to get back on the every year, though, of Rubin, which is much more powerful than this. But
Rubin's next?
Yeah, from Philly, Rubin.
Got it.
But when I say, there was a lot of stories last night. I just want to dispel, I want to tell people why that stock got to 141, because there's a lot of people at home thinking, how come it's at 148? Well, the story at 141, the stories that were run at 3 a.m., 4 a.m., 5 a.m. were how they missed guidance. But there was no guidance. So how did they miss it?
I think, to the degree there was hair on the quarter, people are looking at networking down 15 quarter on quarter.
Okay, that was a glitch. It was a timing glitch. It'll be right back up. Ben Righteous will tell you that at 10:05 today. Ben asked a question about longer-term guidance. I love Ben. That was a question not as well received by Colette Kress as I thought it would be. Colette Kress is the CFO, who, by the way, David, may I just say, in terms of being intimidated by people?
Yes.
I always feel like I'm back in Mrs. Turoff's class in 4th grade when she gave me a B and my father told me I was a disgrace. It changed the whole course of my life.
Explains a lot.
Mrs. Turoff.
Explains a lot. You've been trying to prove her wrong ever since.
Yeah, exactly.
You've almost done it, Jim. You're almost there.
No, my father still wouldn't approve, even wherever the hell he is. 10 years ago he died. He's still with me. He's still thinking in my mind. It was like, Jim, you didn't know how to speak to Colette Kress. Call her back and tell her, apologize that you weren't up to speed.
All right, back to the CFO of NVIDIA.
Sorry.
Yeah.
Need I digress?
Meanwhile, Jim,
$300 an hour for the psychoanalysis. What do I get for it? Ends at 10:05.
Get what you pay for.
Meanwhile, some interesting pieces on the tape, Jim, about Jensen's world tour. We saw a piece of it in Japan, and the notion that he is looking to dig into that sovereign story and rely less on the big four hyperscalers here.
You know what? The Dead Poet Society, whatever that thing with Taylor Swift did, that's supposed to help Target.
Yeah.
This was much better. Now, what's most interesting, this is just a predilection that Jensen has, because he doesn't want jingoism, he doesn't want xenophobia, he wants people to be able to say, okay, listen, we have our own language. The problem is that how do you then therefore divvy up when Mark Zuckerberg says, I need Meta AI the best? What do you say to Andy Jassy, CEO of Amazon?
Yes.
When he says, listen, I spent $8 billion on this Alexa, and she's not conversational. And you say, listen, Fred, you give me for Blackwell. When you say, like, have you ever tried to say, I want Gershwin symphonies on? Okay, I like your Gershwin symphony, or American in Paris, and then it says it has to charge you for the movie American in Paris. That's over. It will know. If you want to ask for Beethoven's piano concertos and it starts playing the sonatas with the Alfred
You use
Brendel,
this example a lot.
but it drives me. Okay, well, look, let's go with Mozart with the Jupiter. It doesn't know Jupiter from Mars, the damn thing. But now it'll ask you, conversation. And by the way, when you come down, it'll say, Jim, you have an 8 o'clock, and then you have a 9 o'clock. Don't forget your psychoanalysis with David. And you can, what's the matter? But it's conversational, and it's back and forth. And that's what Jensen's talking about. That's why one of the things we talk about inning one, we don't have conversational back and forth right now with Alexa. She's disgusting.
I wouldn't. That's kind of rude.
Okay, stupid.
All right, that might be
I didn't want
more
to get too
accurate.
personal. I don't get too personal.
Yeah.
But that's what happens.
That will change.
And it's a whole new industry because the industry now is based on CPUs and coding. Now you can just talk to it. One of the great moments was they have things that they're going to make it so that lawyers, not clear we need them. Not clear we need them.
You don't need the lawyers?
Well, I mean, you don't need anybody between a first year and a third year associate. Those people cost $200,000.
Yeah, but you're going to need them when they get older, so you got to kind of keep them to go through the first, second, and third years.
Oh, okay. So all right, I'll let you go with that somewhat. A new industry of AI factories, manufacturing digital intelligence, industrial revolution.
Yes.
These are things that are not constrained by a price to earnings multiple. I feel like an idiot. Price to earnings multiple. What are you like? I'm small. The TV got small. Here it is, digital marketing intelligence like Riders. How about Harvey for digital artist intelligence? How about Runway? I mean, these are, but he says they're not disruptors, they're additive. But when I read these, if people in professions read this one paragraph.
All right, but nobody has any idea what you're really what you're telling them. You're just reading bizarre names. Harvey.
No, Harvey, it's like the play with Jimmy Stewart. Okay. You're not there.
No, I'm not on you with that one.
Are you Harvey? Oh, come on. You know Harvey, Jimmy Stewart? No?
No.
It's older. It's older than we are. Ben, let's turn to you on NVIDIA. You write about constraints today and how important that term is for NVIDIA.
Yeah, what's great about constraints is it means more's coming later. And in NVIDIA's case, they're the only game in town. You can't just plug in an AMD chip because the software won't work, et cetera. So you got to just wait until they can ship it to you. So we like that. That means the stock's getting bought on the dips. You can see it. It didn't stay down very long. It's probably flattish or slightly down now. But the reason is that we know more is coming later. That drives sequential growth and margin improvement as we go into the back half of the year. And that's ahead of us. And remember, they're the only semis company not talking down the 1Q. That's a big differentiator in this market. So I think a lot of people are going to be buying it on the dip.
What'd you make of his pushback on scaling walls, so to speak?
Well, we wrote about that, too, earlier in the week, and we think that is just something we'll work through. I was really impressed. There's a podcast with Dario Amodei of Anthropic, and he kind of explains the synthetic data trend and how machines are going to create data and then create data from scratch, and that will help feed these machines and keep them going. Usually, in my experience, and I'm no PhD in AI, chip, scaling, but from what I can see, the industry will work their way out of this.
You're not concerned then? I know, because I want to make sure our viewers understand. It's this concern we raised a couple of weeks ago. Mark Andreessen was sort of at the forefront of it, the idea that you're not getting anywhere near the increases in terms of productivity from the latest models versus the last model. You're not a buyer of that in terms of believing that that there's a wall here that's being hit.
I think you have the smartest people in the world working on this problem, and they're going to find their way through it, and they're finding their way through things there was other bottlenecks a few months ago. These are really smart folks that are working their way through things. But I think the positive surprise here is data is the new gold, is the new oil, and it's really coming into its own. We are creating data with AI. We're creating synthetic data. We're creating data from scratch, and these guys are figuring out how to feed that into models. Also, you have Elon Musk taking more and more video, revolutionizing self-driving. I think they've made a lot of advances through video, and Jim's talked a lot about that, but that's really just taken hold. I think we'll find our way through this.
And the data center is the new manufacturing hub, so to speak, for AI, as Jensen said during the conference call.
Yep.
Let's get back to NVIDIA just from your projections. I mean, what are your anticipations in terms of next year's revenues, the growth rate, and therefore back into a multiple for me as to why you have where your price target is?
Next year, I have revenues growing 50%, and I think it's conservative. And then the next year, I'm at 22%. Who knows if that 22 sounds pretty light considering Jensen's track record. Our target is only 35 times our 27 estimate, which is really calendar 26. So it's a PE to growth that's still very appetizing right now for this stock. Of course, on any given day, the stock can go down. But I think given the growth that's out there for this company, and given it's a systems company, sort of like Apple is for the consumer, that's what this is for the enterprise. It's going to be bigger than people think still, with more profits as a percent of the total industry than people think still, and last longer. Just, from my experience, the vertically integrated companies that do it all, that tend to hit it right, tend to go on longer than people think.
I'm interested when you're talking about your revenue projections at 50% and then at 22%, and how NVIDIA executives are sort of walking this walk carefully, talking about growth, but you're probably not going to see 50% forever and still keep people excited. I mean, can they walk this carefully?
Well, what needs to happen at some point here is this is a cash gusher too. And NVIDIA wants to go, we're a growth company. But at some point they have to buy back more stock because there's simply nothing they can do with it. The government probably can't let them buy anybody even close to $1 trillion, of course. So they're going to have to do tuck-in acquisitions, and they're going to have to give stock back. I think they are going to go through, just like Apple did, that metamorphosis of more mature. Hey, we have more recurring revenue. That's why they're building a software business. That's why they're going to continue to do that. And I think that they realize that. But right now they're in growth mode, and it's go, go, go. But I think let's put some trust in Jensen and Colette that they know they have to build up those recurring revenue streams and return more cash to shareholders when appropriate. And those days are coming, and we'll see how they do. But I have confidence that this is a systems company, which makes it a little different than just a chip company who's running and gunning like some of their peers.
Right. You even you compared it to iPhone 6 era for Apple, which I'm trying to think, is that about the time services got taken seriously over there?
Well, iPhone 6 was this huge, big screen transition, and then Luca Maestri, along with Tim, then the CFO, really did a great job of saying, hey guys, this base we just built is going to have all this recurring revenue. Here's what it is, more disclosures around it, more. Now, they're not ready yet in NVIDIA, but they said last night that $2 billion in software revenue as we exit the year. Within a year or two, that number is going to be way more significant, way more tracked. But also, there's DGX Cloud. There's other things they're driving. They're driving NIMs. They're enabling the market. And these kind of things are going to get more important as we go throughout. And I think a lot of companies, especially enterprises, are not going to be able to live without these products as they adopt AI.
Now, joining us is Morgan Stanley analyst Joseph Moore. Joseph, obviously a lot of discussion so far on NVIDIA. It's been the talk of the week, not just the morning. What's your sort of overall initial read on the quarter? Does it make sense to you as well that you're seeing the stock price action lower here after that quarter posted and the expectations going forward?
Yeah, I think so. I mean, the narrative here is going to be the ramp of Blackwell, right? And they've used these descriptions of Blackwell of, staggering demand, insane levels of demand. At the same time, your revenue in the next 6 months is still driven by majority Hopper, which is the older product. And, so I think you're going to have less upside for a couple of quarters here while we move into that Blackwell ramp. And that's how we previewed it. We didn't think there would be as much upside maybe as some thought. And and there wasn't. But I mean, it's still a very good quarter. You beat revenue guidance by $2.5 billion. No semiconductor company other than NVIDIA has ever done that. And I think they are looking at a very strong Blackwell cycle into the back half. But it is a transitional period as we sort of move from the later days of Hopper into the beginning of the Blackwell generation.
There was so much to like in this quarter, but nothing is without risk. What would be potential concerns for you as you're looking ahead as Blackwell scales?
Yeah, well, they've talked about lower gross margin, and they did guide gross margin in the first half of next year below our expectations. I think that's largely a function of the complexity of Blackwell, the number of different SKUs that they're going to have out there, the systems innovations that are required there, and wrestling with some of the supply constraints around that. But they did mitigate that concern by talking about much higher gross margins in the back half of the year. So actually, if you look at our margins for the full year, they actually stayed the same, but we lowered the first half, raised the second half, and we exit next year at a healthier rate. So I think that's one of the elements. And again, I think, when you have these transitional windows, we are still talking about a very large number of Hoppers, right? They'll do north of $30 billion of Hopper revenue this quarter, which is a product that has already been effectively Osborned by the next generation product. So I think there's risk around all of that, but I still feel pretty good about it. And I think we're looking at the strength of Blackwell and this kind of scaling concerns, the debates that are out there. I think NVIDIA did a very good job of addressing that and talking about why this will continue to scale and grow into the back half of the year. So, some risk for sure, but I think, 3.6 trillion market cap for those of us who have covered the stock since the IPO is a surprising number, but, they're executing really well and the narrative is really strong.
Hey, the sequential decline in networking got a little bit of a look last night and this morning, but then got written off as noise. Is it something?
Well, they talked about most of the core components of networking being up. So InfiniBand was up, Ethernet was up, Bluefield was up. So my sense is it is at the noise level. I think there's some of the optical component business, as there's a mix shift towards Ethernet, they probably have a little bit less of an optical sell through. So that's a lower margin part of the business anyway. So the core elements of networking continue to be quite strong. And I think that they talked about networking continuing to be strong into next quarter. So I think, there's mostly noise on that, but it certainly is something that got people's attention.
Finally, the other thing that's getting framed a bit today, Joseph, is, Jensen's been talking about sovereign demand for a while now, but this recent trip to Japan and this notion that is he trying to diversify away from the big four hyperscalers? Is he trying to graduate the perception of that pie? What do you think?
Yeah, I think that there are a lot of sources of demand here, right? I think when you look at inference being close to 40% of revenue, probably over 40% of revenue, and when you look at sovereign demand, as you said, they've talked about that as a low teens percentage of revenue. I think some of the enterprise applications are sort of in a similar mid-teens percentage of revenue. A lot of the focus goes to these mega clusters and the sort of race to have the biggest cluster and people spending tens of billions of dollars. And that probably is the element that as you look out to 2026 has the most uncertainty. But there are a lot of businesses within this that do have quite solid growth potential, including sovereign, including enterprise, including some of the inference parts of the business that, we still have business plateauing somewhat in 2026, but still very good growth prospects, even as we get past this period of the Blackwell product cycle.
Quite an incredible company, incredible run on the stock. Joseph, you upgraded, of course, that target price here today. Joseph Moore, thank you very much for being with us following NVIDIA's quarter.
Let's talk about NVIDIA, okay? Your read on the quarter, which was, obviously a beat, sales up 94% year on year. That is a slowdown from the prior 3 quarters, which have just been astounding, and 94% up year over year is amazing, obviously, but what's your take?
Let's say at the start, it's down a little bit today because expectations were sky high. But this was a blockbuster quarter by NVIDIA, right? What's clear to me now, and what I think the biggest takeaway from the call, is that the world runs on NVIDIA. As Jensen said, AI is in full swing. He said this is a multi-year event. This is not just about training AI. This is about moving all the world's x86 architecture, all the applications that run on CPUs are going to be rebuilt over the course of the next 3 or 4 years on GPUs that are running machine learning. So I think that the market is going to have to digest. This just isn't about training clusters in 2025. This is about GPU data centers that are going to be built in 26, in 27. And so for us, our numbers came up. You saw that I think 10 sell-side analysts took up their price targets for the stock. We were buying it pre-market when it was down.
Oh, you're
today.
buying it this morning?
Yeah. So, I think it was a blockbuster report. And I think, it's clear to me that the Intels of the world are going to continue to lose share, and the NVIDIAs of the world are going to continue to gain share. And if you want to bet on the tailwinds associated with AI, you have to have NVIDIA in your portfolio.
Okay, so it's now your number 2 position.
Correct.
With buying a little bit more this morning. Josh, what was your take on the quarter? You obviously well known for being in this stock for a very long period of time.
I think they were very artful in the way they maintained everyone's enthusiasm for the potential for Blackwell, where orders stand, the fact that demand is still outstripping supply, but they didn't ratchet up the excitement too much to put them into a position where they just can't win the next time they report. And that's really going to be the company's job going forward. It is already the largest market cap company in the world. It is already the most must-own stock in the world. There is no need to continue to put pressure on themselves to outperform and outperform and outperform. So it's harder than it sounds because they do have a really bright future. And the revolution is real. And the dominance of GPUs and data centers going forward is undeniable. And their market share position within that revolution is also undeniable. So they have to now do this quarter after quarter, give people realistic guidance, execute, ship products, hit those numbers, but not paint themselves into a corner that they can't escape from, where the market expects them to double revenue every year, which, of course, like mathematically will be impossible. So far, so good. I think Jensen understands the mission. I think he's accepted the mission, and I liked everything I heard last night. The most important thing, and I'd love to hear Brad react to this, is this idea of the moat, because competitors are coming in with new solutions. Amazon is ramping up production of their own Trainium 2 chips. Like, they will not have the whole markets themselves forever, but they can maintain dominance, and it might actually be a good thing for the ecosystem for there to be more products out there. I think that's the tone that was set last night, and I think other NVIDIA longs heard the same thing that I heard.
What do you think? I mean, that's all about the idea of the installed base. And we've heard Jensen talk about that before, almost in the same way. And I think I've mentioned this in the past, of thinking about that in the same regard as we do Apple with its own sort of powerful installed base.
Yeah, I mean, listen, the stock started the year at $49 a share, $50 a share. Today we're at $145 or something. The asymmetry is closed, and part of the reason for that is everybody had this wall of worry, right? Custom ASICs, Amazon's going to have their own Trainium chip. I said on our recent BG2 podcast, of course they're going to use Trainium. It's a cheaper price solution for certain customers, but they also, Jassy has said he's going to buy as much NVIDIA as he can get his hands on for as far as the eye can see. They know the world runs on NVIDIA. So, listen, when we look at our price target for NVIDIA next year, it's up 30%, not up 100% like it was at the start of 2023 or at the start of 2024. So when you ask me as a portfolio manager, we took down the size of our position. It was a really outlier position for us to start the year. It was a normal sized position for us coming into this quarter, and we're adding a little on the pullback in this quarter. But we think it's going to be a great compounder and a great bet on not only AI, but also on the replacement, the move from x86 to GPU-based data centers for the next several years.
Okay, Bryn, what about you? You've been a holder of this stock for a long time, too.
Yeah, I mean, I think what's so amazing, and you talked about this moat, and what this means for the AMDs of the world, et cetera, is Jensen walked through how 64 Blackwell GPUs can run GPT-3 compared to 256 H200s. So they're even making chips, the Blackwell, which is not a chip, they're making these GPUs that are cannibalizing their own products. And this is why they are so hard to compete with, is they just continue to innovate so quickly. And then when he talks about how Oracle is announced this Zetascale, whatever that is, AI cloud cluster, that can handle over 130,000, Blackwell GPUs. And so I think when Brad talks about this shift going from modernizing from CPUs to GPUs, I don't think we are really great about understanding. Jensen thinks it's $1 trillion over the next 10 years. I mean, the difference between a billion and a trillion, a billion seconds is 32 years, a trillion seconds is 32,000 years. I think we are still early in this, and this moat is going to last for a very long time. But I do think there are going to be big winners and big losers. And right now, NVIDIA is the winner of the bunch.
And Liz, I mean, obviously the market's still trying to digest it. If there was any bit of, I don't even want to use the word disappointment. I mean, there's just so much to live up to. As we said, we had 11 or 12 price target increases on the name. I only see one firm talking about their guidance being below what they would suggest is the bull case. I mean, as you watch the market here react to it, what do you think?
Well, I think the most important points that have been made so far are that expectations were so high. Brad said that at the beginning of the show. And then Josh about making sure that they can set realistic expectations going forward. This market is hard to impress on stock price action. I mean, we're talking about situations where you've got beats and raises being punished in the stock price. So first of all, I think we're still in the infancy of this AI theme. We're going to be in the infancy of it for a little while yet. But as it matures, what we're going to find out is whether or not the companies that have been the winners so far can continue to win along that vein. And then who are the other ones that will come in, and even the other industry groups that will come in. And something that's been really interesting to me in the last month or so is just the performance of software. And I think some of that has to do with the fact that, okay, we've established that this thesis will continue going forward with AI. What else can companies start to spend on? Where can they actually find the profit? And who are the companies that are going to help them create that profit? And I think software is a big group that's going to benefit from that going forward.
Let's start with NVIDIA, which is lower today despite delivering another solid quarter with revenue nearly doubling year over year. The guidance was ahead of estimates, but the bar was very high, and it could be somewhat of a sticking point for investors. But come on, are we going to quibble about a 1% decline? The stock's tripled this year. My next guest kind of agrees. He still has a buy rating on the stock, and while he acknowledges some supply constraints, he expects them to be short-lived, with Blackwell ramps accelerating in the first half of next year. Srini Pajuri is senior semi-analyst at Raymond James. He's got a 170 price target on the stock. Why do you think there's some selling off here? And Srini, is it even significant given that last time around, I think the shares were down 6-7% on the results, and then they still rallied sharply into this quarter?
Yeah, Kelly, we don't think it's all that significant. First of all, the demand itself is very strong right now. One indication, actually, one big positive surprise in the quarter was that if you look at the Hopper demand, the current product that they're shipping in Q3 and also into Q4, that grew 5 billion sequentially. That's the fastest growth in the last 4 quarters. In the last 4 quarters, Hopper growth has averaged about 3.5 billion. And in 3Q, it was 5 billion. And usually what happens is that when there's a new product coming out, there's always this concern about a slowdown in the older products, but we're not seeing that. So that tells me that the underlying demand is very strong. And as you said, supply is the main issue for the inline-ish outlook, and that's something we were expecting. So, we think the demand is going to continue to outpace supply for almost all of next year. So if anything, as long as the cycle extends, we actually view that as more of a positive. So we're not worried about, a small pullback here.
Srini, can we kind of back out for a second and put this in context? And maybe you can use, what your direct experience throughout your careers is a kind of the witness point. It's so unusual for a semiconductor company to be worth $3.5 trillion. And are we, the valuation is not that rich. They continue to kind of match where they need to be with the market. So it all seems real. But is this sustainable as a part of the U.S. economy? Is it sustainable in terms of the semi-cycle? I mean, I would just love your thoughts on the significance of all of this.
Yeah, when you look at the market cap in a vacuum, it does look a little scary, I'll be honest with you. But at the same time, you look at the company's profitability and the valuation, it doesn't look that bad. Historically, this is a stock that traded at about 40 times on average. Right now, it's in the low 30s. So the question is, how long this, AI-related spending will continue. Just listening to their customers, it doesn't look like we need to worry about a slowdown, at least in for the next 12 months. Of course, there's going to be a pause at some point. We don't have visibility as to when that pause is going to be. And the other question we get is that, what's the ROI like on AI? Why are we spending all this, amount, right? So I think, the better way to look at it is that right now the competition is so intense among hyperscalers. That's what's driving it. It's not so much about, ROI. I think the reason is that in tech, there's always one winner, right? If you look at any of the, previous, tech evolutions, there's always one winner. So I think, the competition is going to remain very intense, before we know who the winners are going to be. So that's not going to slow down. So I think it's a little too early to think about ROI from that standpoint.
That's really interesting. So basically, because Google is battling, Amazon is battling, Meta, because they're all still fighting to be number one, it's benefiting NVIDIA. That definitely makes sense.
And then, of course, there's the other thing, NVIDIA, right? Everyone hated NVIDIA. Think about the reasons people say don't buy this market. There were the reasons for the last 10 years not to buy NVIDIA. It faced all kinds of scorn from the financial media, from Wall Street. It was this, it was that. Well, today, the financial Wall Street has no choice. They're all over this stock. I want to bring in right now one of my favorite guests when we start talking about this, from Spear Investment founder, their CIO, Ivana Delevska. Ivana, step in here for a second. Look at this. These are all the targets that was raised, maybe more by now, right? So Mizuho, Goldman, Bernstein, Citi, Deutsche Bank, Morgan Stanley, Evercore, Barclays, Wedbush, Truist, TD Cowen, Barrett. Then you had a few reiterations, right? Strong buy. Only thing I would say is kind of interesting to me, the targets aren't that high. Not necessarily. The highest we see is 190 from Evercore. Are you surprised that Wall Street has, they're saying buy the stock, but they still seem to be playing it close to the vest?
Well, it's not necessarily surprising because that's how the sell side works. They really look at 1 quarter ahead and they model it. If you want to be looking at the situation correctly, you really need to take a step back and look at it 3 to 5 years out and model the next generations of chips. So the Blackwell is really the upside that we're expecting to see going into next year. And then there is future generations of chips that will come after that. So the key here is whether scaling laws will hold, which will mean that people will have to invest, and whether they're going to be able to execute on this next generation of Blackwell chips.
So let's look at those. So here's NVIDIA's quarterly earnings going back to the fourth quarter of 23. Just the mind-boggling stuff. Data centers, $3.6 billion to almost $31 billion. It was known as a gaming stock for a while. Remember, and the video game stuff that made a big move. In fact, every one of these categories, data centers, gaming, professional visualization, autos, all came in better than Wall Street consensus. What's going on? They're executing in every facet of their business.
So really what it came down is the guide. They guided to $37.5 billion for the next quarter, which, as you can see here, is not as big of a jump.
Right.
And I think what people misunderstand is this next generation is going to be very different than the Hopper in that it requires actual physical infrastructure build out. So while the Hopper was going into existing data centers, right now you're going to need whole new data centers with all kinds of power requirements, networking requirements.
So that slows it up a little bit here?
Well, that makes it a little more volatile, but it's also going to make the upside larger. So this is why you're seeing networking stocks, power gen stocks really through the roof today, is really because people are realizing, hey, there's going to be significant investment.
But it's got to happen. You like what you heard on Blackwell?
Absolutely. We've done channel checks on Blackwell. The demand, as Jensen was saying, is truly insane. Basically, the prior generation Hopper, people were ordering in the 10, 20, 30,000s. Here, people are ordering in the hundreds of thousands.
So here's a fun thing for you, Ivana. AI reviews NVIDIA's earnings results. I love it. So AI says the negative: supply constraints, gross margin pressure, competition in China, and market digestion. Are any of these long-term issues for you?
Well, supply constraints are a short-term issue that we think are going to be resolved. Gross margin pressure, I think people don't realize here that when you launch a new product, you are trying to sort out the value chain and the supply chain, and that's what's causing gross margin pressure. As Blackwell ramps in the second half of this year, gross margins will be up.
Right.
Competition from China, that's not really a concern because we haven't really seen anything legitimate. And market digestion, Jensen said that he expects that when we reach $1 trillion.
By the way, Jensen's going to be on with Liz Clayman right after the show. The AI data center value chain. I love this. It's a great piece. Is there anything on here? We only have 30 seconds, but is there anything else on here that we should be looking at where the next opportunity is?
So networking is really the most immediate opportunity that we're really focused on.
Over here, the networking area.
Yep, that's
Okay.
exactly right. So this is basically like transceivers.
Well, this stock, Arista's up like 10 points today. Marvel does. These are some interesting names in.
That's right. And then also the power and thermal management side.
Right.
These are a little more boring companies, so you're not going to see 10% move.
Vertiv has been on fire, though. I mean,
That's
somebody
right.
said, GE Verno, I got phone calls on that one today.
We
Real
own
quick.
that as well. We disclose our holdings on our website, by the way, for people that want.
What's your website again?
Spearinvest.com.
Spearinvest.com. You also like NVIDIA, Snow, and Tesla.
Yep.
You've been rocking. Golly, give me a high five. You've been rocking. Are you kidding me? Thanks a lot, Yvonne. All right.
Joining us now in a Fox Business exclusive is NVIDIA founder and CEO Jensen Huang. Jensen, great to have you on the show. Thanks so much for joining us.
Nice to see you, Liz. It's great to be here.
Great to have you. The superlatives used to describe not just your earnings, but your outlook ranged from, I was writing these down, full steam, full throttle, incredible. But the headline really emerges that you guys have a problem most CEOs would love to have. Demand for two of your products, right? Both your Hopper chip and the orders for your new Blackwell chip far exceed the supply you have. What's the most important step you guys are taking to speed up the process to fill these orders?
Well, first of all, I appreciate that. Hopper and Blackwell are two just magnificent computing systems. And what they've done is these two computing systems has really reinvented computing altogether. From software that was written by humans running on CPUs to now machine learning, creating these neural networks that make possible artificial intelligence running on our GPUs. And so as the world modernizes the data centers, $1 trillion of data centers around the world, the demand is just incredible. Mm-hmm. And so we're ramping both of these platforms incredibly hard. We had a record quarter this last quarter. We guided to a record quarter next quarter. We're going to go from $0 billion of Blackwell to many billions of dollars of Blackwell. And so it's going to be an incredible thing, but the demand is just incredible.
Yeah. I'm so interested to know some numbers. How big is the backlog for, I guess, both the Hopper and the Blackwell system, the successor that a lot of people want to see? Are you seeing any customer behavior, Jensen, that says, you know what, we're going to wait for the newer Blackwell model?
Well, people are modernizing their data centers, and so they just needs to get going. And what I advise people to do is that, and they are doing that, which is we're going to create new systems every single year. Buy what you need that year. There'll be something new that you can buy next year, and then you'll just cost average your way through. The reason why it's cost averaging is if we increase the performance every single year, effectively you're reducing your cost for any amount of computation that you want. Instead of the classical old data centers, we're going to, several $100 billion of capex each year will go into these machine learning based and AI based systems. And so we have hundreds of billions of dollars of IT systems that we're going to have to go build over the next several years.
I think the number's been put out there for all these companies, whether they are tech or just basic enterprise, ramping up and spending on AI is something like $350 billion. But let me tackle the hyperscalers first, meaning the 800-pound gorillas in the AI space who are desperate for your chips. Meta, Google, Microsoft, SoftBank. I would love to know how orders are filled, meaning who gets preference? I mean, does it go by who ordered first or by the size of the customer?
Well, if you don't place an order, it's hard for us to fulfill it. And so most of them have placed orders. We try to be fair with everyone so that they can all get their AI infrastructure up and running. We also make sure that their infrastructure is ready. And so between us and them, there's no sense shipping computers if the data center and the power and the readiness of the system is not there. And so we work very, very closely with all of our hyperscalers. We've been planning for this for some time. And I think at this point, everybody has demonstrated, everybody has stood up their AI infrastructure, the Grace Blackwell systems. I think OCI has shown pictures of it. Google has shown pictures of it. Dell and CoreWeave just showed a picture. I think it was last night, and Satya at his conference announced that they're going to have previews for their customers here pretty soon, and they've got their system up and running, and so everybody's really proud of the systems they've stood up, and we're all just racing to get there.
Yeah, and we're talking about hundreds of thousands of these, and people are dying to get their hands on them. Can I just get some clarity on the question about the overheating? This report over the weekend, there was in the information this report that said that some of these were overheating. Can you just tell me if that was an issue? If it's true, was it an issue basically with the Blackwell chip design, a rack problem, or was it simply that the data centers were not built to the right specs?
It's a non thing. It's probably somebody who heard somebody doing engineering, integrating our systems into their data centers. In the beginning, there are all kinds of engineering issues, but these are normal things. We're just doing engineering. We know that the Grace Blackwell systems work, and we know that all of the technology now works because we now demonstrated 4 of them standing up. We have lots of them working at our company. We have lots of them working within our customers' companies, and so we're very confident, and we're in good shape with Grace Blackwell production ramp. But it's still, we have thousands of engineers doing all kinds of things. So I'm not sure what they heard, but it's a non-thing.
Well, it's a long way from 32 years ago when you founded the company with just a few employees and a dream. And as you begin to really see this come to incredible fruition, at least when it comes to generative AI, I'm so interested to know about pricing. How do you view pricing? Because if you're having trouble, because you did say into few quarters for fiscal year 2026 that you would see some issues with filling these orders, how can you keep the price the same, and will it rise?
We always do pricing based on the value delivered. And so we're very rigorous with respect to the simulation of these AI factories. In a lot of ways, the way to think about this, Liz, is that here's this machinery, this big, huge machinery, and you apply energy to it, and what comes out of it is AI. We call it generative AI. In a lot of ways, it's kind of like generating electricity in the last industrial revolution. And there are all these machinery, these large machinery called AC generators, and they produce electricity. We're now producing this miracle called artificial intelligence.
You said that you're transforming, and AI is transforming every industry, every company out there, all around the world. And we see that. We definitely see that. But you have some of the loudest voices now in Silicon Valley. I'm thinking Mark Andreessen, the venture capitalist from Andreessen Horowitz, saying AI has hit a wall, it's plateaued, it can't go further right now. And he named 2 reasons. He said due to both the lack of enough GPUs and then the training data. It's almost like he was pointing the finger at NVIDIA that you guys aren't getting these out quickly enough. What do you say to that?
Well, our demand is greater than our supply, and so we need to get more out. And so we work with thousands of startup companies, and they're called AI native companies. From the ground up, they're built to be an AI company. From the ground up, this is a company that would develop capabilities and new products and services that are made possible because of AI. And we're working with thousands of them, and it's hard to at this moment keep capacity and infrastructure available for every one of them. And so we're working super hard to get there as fast as we can, which is the reason why we're ramping Blackwell so hard. With respect to AI, there's a fair amount of discussion about scaling laws, and the scaling law basically says the larger the model, the more data that you train it with, and the more computing therefore you need, the more effective the AI becomes. And so that's we're kind of on our back foot with respect to the amount of demand that's out there, but we're running as fast as we can to get the supply out there.
Well, it feels like you're not on your back foot, that you are standing pretty tall and holding ground because you are able to just crush it on earnings, and your outlook is pretty impressive too. You talked about growing customer bases in India, and obviously, you will have a situation where you have to hold back on China, depending on what the regulations are here in the United States. But I'm interested to know if you're hearing from the Middle East. They have had some real ambitions here.
Yeah, listen, in just about every single country, and it's sensible, they now realize that their nation's data, their language, whatever their the language happens to be, their language, their digital language encodes their nation and their people's knowledge, history, and culture. And they now realize that they have to take that digital data and turn it into their nation's intelligence, and that they can't wait for someone else to come do it for them, that they have to do it themselves. The success that we've enjoyed is largely in the United States, but over time and very quickly, whether it's in the West or in the East, we're going to see just about every single country jumping onto this AI revolution, this age of AI.
As we finish up, what do you say to people who are very concerned about this? You hear them and they believe that AI is going to turn us into digital slaves and that the machines will rise and control all of us. You've had these discussions before. What's your gut reaction to that?
AI can do a lot of our tasks, but they can't do 100% of our jobs. That's the big idea. The idea that AI would somehow do 100% of somebody's job is very, very unlikely and quite frankly impractical for any time near any time in the horizon. What is very likely is that AI will do 20, 30, 40% of 100% of the jobs in the world. So what that means is that AI is going to revolutionize and transform everybody's jobs. And it's really important that everybody should learn how to use AI. They're not going to lose their jobs to AI. They're going to lose their jobs if it happens. They're going to lose their jobs to someone who uses AI. And so that's the most practical way of thinking about it. And for the foreseeable future, that's absolutely going to be true. And jump on AI. I would encourage everybody to use it. And if you haven't had a chance to use ChatGPT, use Perplexity, use Gemini. These are incredible. Use Claude. These are incredible AIs. I use it every single day.
Yes, I would imagine you do. Just don't replace newscasters and journalists, please, Jensen.
You're in great shape. You're in great shape, Liz. We need you.
Thank you very much, Jensen. We appreciate it.
All right, I hope you're all doing great today. The S&P finished the day about 0.5% higher, and NVIDIA finished the day up by about 0.5% as well. I am very pleased with the results that NVIDIA reported yesterday. Revenue for the quarter grew by more than $5 billion sequentially. NVIDIA beat on both the top and bottom lines, and next quarter guidance was raised to $37.5 billion. These are incredibly good numbers. As usual, the bar for NVIDIA was so extremely high going into earnings, and so the stock traded slightly lower yesterday and after hours trading. But as I said in yesterday's video, I don't really care how market participants react in the short term. This is because these numbers are fantastic, and the long-term thesis behind NVIDIA and the build-out of AI infrastructure remains firmly intact. I've been saying for a while now that I would not be surprised if NVIDIA were to double over the next 2 years. And after seeing these results, I honestly still think that is possible given NVIDIA's growth trajectory and upcoming product cycles. It's also a relief to hear that the rumored overheating issue is essentially a non-issue. If there is any overheating happening, it sounds like it's just a one-off occurrence possibly coming from a unique custom rack setup, and it's not a consistent problem across all of the Blackwell racks. That is very good news. Put simply, after this earnings report, the long-term thesis remains intact. Demand for NVIDIA's products is insane. Hyperscalers have yet to show any signs of reducing their CapEx spending on the build-out of AI infrastructure. And we have a clear product roadmap from NVIDIA for the next 2 years. This year, we get the launch of Blackwell, then Blackwell Ultra in 2025, and later on Rubin in 2026. As long as everything remains peaceful in the Pacific, and as long as none of the hyperscalers significantly reduce their CapEx spending on AI, then I think NVIDIA should be just fine for at least the next 1 to 2 years. And things are looking really nice for Q1 and Q2 of fiscal year 2026 as Blackwell production ramps up in volume. NVIDIA will report earnings for those 2 quarters in May and August of 2025. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.